What's up, family? This is your boy Ivan Hall, the Credit King. Do you know how much money you actually need for a down payment? A down payment is a sum of money paid in advance to make a big purchase, such as a vehicle or a home, and is indicated as a percentage of the total cost. On a $350,000 property, a 10% down payment would be $35,000. The down payment is your contribution toward the purchase and symbolizes your first ownership share in the home when applying for a mortgage to buy a house. The remainder of the funds is provided by the lender for the purchase of the property. The majority of mortgages need a down payment. There are certain exceptions, such as VA and USDA loans, which are backed by the federal government and do not often demand down payments. Putting down at least 20% on a property increases your chances of getting accepted for a mortgage at a reasonable rate and avoiding mortgage insurance. You can, however, put down less than 20%. The amount of money needed for a down payment on a property varies based on the kind of mortgage. The Federal Housing Administration backs FHA loans, which need as low as 3.5% down payment. VA loans do not normally need a down payment since they are insured by the U.S. Department of Veterans Affairs. Current and former military personnel, as well as qualified surviving spouses, are eligible for VA loans. USDA loans, which are backed by the United States Department of Agriculture's Rural Development Program, do not need a down payment. USDA loans are available to purchasers in rural and suburban areas who match the program's income limitations and other criteria. Some traditional mortgages, such as those offered by Fannie Mae Home Ready and Freddie Mac Home Possible, only demand a 3% down payment. Conventional loans are not guaranteed by the government, but they must adhere to the down payment requirements established by the government-sponsored firms Fannie Mae and Freddie Mac. The amount of money required for a down payment varies depending on the lender and the borrower's credit history. With a credit score of 580 or more, the minimum down payment for an FHA loan is merely 3.5%, but with a credit score of 500 to 579, the minimum is 10%. Saving money takes time, so a no, or low down payment requirement, might help you purchase a home faster. Making a bigger down payment, on the other hand, has its benefits, which include a lower interest rate on your mortgage. Fees are less expensive both upfront and over time. Right now, you'll have more equity in your property. A smaller mortgage payment on a monthly basis. In the viewpoint of the lender, a lesser down payment makes the loan a higher risk. FHA, VA, and USDA loans are government-backed mortgage programs that decrease risk by insuring a percentage of the loans. If a borrower fails on one of these loans, the government entity responsible for the loan will compensate the lender. However, depending on the scheme, you pay for the guarantee through fees or mortgage insurance. If you put down less than 20% on a conventional mortgage, you will almost always be required to pay for private mortgage insurance. Your ideal down payment amount will be determined by your objectives and financial position. A bigger down payment may result in a cheaper monthly mortgage payment, but putting too much down may leave you cash-strapped when you move in. To assist you in determining the appropriate down payment amount, consider the following. To examine how the down payment impacts the monthly mortgage payment, use a mortgage calculator. Make a budget and keep enough money in the bank for house maintenance and emergencies. Use only a portion of your funds for a down payment. After you buy a house, you'll need money. Finally, do some comparison shopping. To get the best deal, compare mortgage rates and programs provided by lenders, as well as costs. Now, go get that money.